What's up, guys? Wanted to join you tonight and kind of go over a couple of things I was going over for Private Wealth, our club, and just kind of talking to some of you guys that are interested in doing passive investing so you can invest in real estate to kind of build wealth for you and your family and create second stream of income. And one of the things thought was very important and I wanted to share and I was sharing with somebody else was really like when I take a look at something, I have a checklist for what I'm looking for whenever we're looking at an investment, why we chose multifamily real estate. But this is from a financial perspective. When you're going to invest your money passively, you kind of want to know why you're doing it. And for us, I have a couple of things that I look for in any asset class, and I think it's valuable. So if you're thinking about investing, maybe you can use this checklist, but I like to share it with the people in the club, and I want to share it with you guys. So for us, what I'm looking for, any investment that we make for real estate and why we chose real estate and why you should too, is number one, it needs to protect your capital. Anytime you're making an investment as a long-term investment, you're parking your money in a place that is supposed to protect your capital, it needs to be something that's real. So that's the number one thing that we're looking for when looking at any investment is does it protect your capital or does it protect our capital, right? Number two, does it provide cash flow? It needs to provide passive income or cash flow for you. If it doesn't provide cash flow, it's probably a no-go. Like even Warren Buffett, like even though he talks about investing and buying stocks and things like that, he looks for distributions. He looks for cash flow. Coca-Cola pays him cash flow. All of his investments have always paid him cash flow because he's a distribution player. Even though he's buying stocks, he's looking for income, dividends, and cash flow on all of his investments. So that's number two. Number three, is this will it provide us or can it provide us long-term appreciation? This one is huge because even though you're investing for second stream of income, you are looking for your investment to continue to grow, period. It can't just be second streams of income and your money sitting there and you're like at some point that investment needs to grow and that comes through appreciation and multifamily real estate does that for long-term purposes. All right. The next thing that we go over always is does it provide tax write-offs? Your investment should provide a tax benefit and a tax advantage, so you get to keep more of what you make. In a lot of multifamily real estate deals, you get bonus depreciation or regular depreciation. So sometimes you will write off. I mean, you may write off all of the cash flow that you get, and if you do the tax benefits correctly, sometimes it can offset some of your other income from other things as well, right? But it needs to provide tax write-offs. If it doesn't, that's a problem. So you should be able to get good debt. We're on number five. Good debt is very important because if you have an asset and you're able to get good debt on it, your investment, just like we talk about for multifamily real estate, every dollar you invest is worth value of three times with good debt on their property. So if you're a passive investor, you want to be like, hey, I put in 100 grand and my 100,000 in this investment will be worth $300,000 with good debt, right? It's important to know that. Or $1 million is worth $3 million in an investment that way. While you're getting cash flow, while it's appreciating in value, you know that your investment has also went up, and that's because of the debt that we're able to get. All right, next, it protects you against inflation. You guys all know I talk about it quite a bit. If you leave your money sitting in the bank, it is losing its buying power every day, every minute of the day, and that's what's happening. Ever since 1973, the year I was born, the dollar's lost 86% of its buying power, right? So that's 86% of its buying power. That is crazy. So every day that you like, even though people are like, well, my money's in the bank account or it's in this and it's safe. Well, it's safe for the bank. It's not safe for you because when you pull that money out, that money is going to buy you a lot less. So the investments that you're in need to be to protect you or should be an inflation hedge against the market with what's going on with all the craziness in the world. All right. Meaning the wars and all the other stuff. And they're going to print more money, whether you like President Trump or don't like him or the next president. You have to believe in your lifetime they will continue to print more money. That causes inflation. All right. Next, it needs to be proven and tested over time. That's huge because with multifamily real estate, we all know it's proven. It's real estate. Like no one's questioning that. It's not a tech thing. It's not Bitcoin. Bitcoin can go up, it can go down, it can go away. Apple stocks, I think they're going to be around forever, but it can go down. It's proven. It's there's new stuff. It's AI that's not proven that people are constantly raising capital for, doing IPOs for. So if you're investing in those things, you don't know whether it's going to work, right? Some new technology may not be around anymore. Real estate itself is proven for 2,000 years, hundreds of thousands of years. It's been around and it'll continue to be around. It is the largest asset class from an investment standpoint on the planet. All right, hands down. Next, it's easy to finance. Back to the debt. It's easy to finance because banks love it, lenders love it, Fannie Mae loves it, Freddie Mac loves it, debt funds love it, life insurance companies. Some of the largest real estate owners and real estate funders, meaning they fund on the planet, are life insurance companies. And if it's good enough for them, it's good enough for you. Like they will finance it. So knowing that multifamily real estate as an investment vehicle or an asset class is great because it's easy to finance because there's so much debt that's willing to go towards it because it's housing. That makes for a good investment or an asset class for you to put your money into as it relates to being long term. Next, it's easy to scale, meaning if you put your money into a real estate asset as a limited partner or passive investor or whatever, um, that you could do it with a single family house. No problem with that. I always tell people don't do a single family investment. I don't think that's a good investment because it has one door. If it has one door, don't do it. You need multiple things. So you can take that same 100,000 and invest it in a fund like we have at Bell Capital or do your own deal or whatever. And that 100,000, let's say it's in a 50 or 60 unit apartment building, that one address has 50 residents or tenants. It has or 100 tenants or 500 tenants, as opposed to taking 100,000 and buying a single family home and it has one tenant, right? Single meaning singular, family, one family versus a four family or a 10 unit building, which is 10 families, or a 500 unit building, which is 500 families or residents. That's huge. So it's easy to scale as an investment. Next is hard to disrupt. You can't just press a button and make it go away like stock. Like for example, like the other day we were watching something, the stock market came out, there was an announcement. I think the Straits of Hormuz is going to be closed, and you wake up the next day and trillions of market cap was wiped away. Like that, you're not going to do that with real estate. Now, does the stock market go down? Yes. Does values and assets go down? Yes. But if you're not exiting your deal, you will continue to get cash flow, and as the market goes back, so your real estate. The real estate actually doesn't go anywhere. So it's very hard to disrupt. It can't be destroyed just by pressing a button. Even to demo a building, you got permits, you got plans, you got to kind of have you got to get it approved. It costs money to do that. Like it takes time, right? So it's very hard to disrupt. And then number 11, which we're on 11, sorry, I wasn't counting out the numbers, is, and this is, some people may not think this is a plus. I think it's a plus. It's illiquid. So as an illiquid investment, meaning you can't just press a button and get your money back out. Like if you're doing an investment in a fund or a syndication, you're going to be in that deal for 3, 5, 7, 10 years, maybe longer. Because of that, that is a plus as it relates to a long-term investment in asset class because you can't just get your money out. If you have an emergency, you got to kind of deal with that emergency by either making more money, focus on other opportunities, or doing it. When you do this, this is for you and your family. It's a generational play. You're going to invest. You want second stream of income. You want to retire early. You want financial independence. And oh, by the way, you want to create wealth for your family. You can't just go and press a button and take it out. So being illiquid in a piece of real estate is actually a benefit. And the other thing, the last one, is that it's real. It's real. It's solid. It has an address. It's brick, steel, and glass. It's proven. It has a track record. You can pull up an ownership track record, the history of this property, ownership passing on. All of these things are valuable. You can't do that with a stock. So if you're in cash, like I said, they don't check all the box. Stocks, it doesn't check all the box. Mutual funds, maybe your money's in a retirement account, which still falls along the lines of stocks, mutual funds, things like that. Maybe bond, crypto, Bitcoin. Some people want to put it in gold. Some people want to do their own single family house. I told you about that. They don't, that doesn't check all these boxes. Multifamily apartments usually checks all the boxes. So if you're a passive investor or limited partner and you're looking to get into any type of things like this, these are the checklists we use. It's 12 of them. I'll go through them real quickly again. Number one, protects your capital. Number two, it does provide cash flow or passive income. Number three, there's long-term appreciation. This is my checklist when we're looking at an investment. That's why we chose multifamily real estate. Number four, there's tax write-offs. There is tax write-offs, tax benefits. It gets passed on to you, and that way you get to get the benefit, and you don't get that with stocks. Number five, good debt. You can get good debt on there. It's reasonable debt. Good debt meaning like you're not. 100% finance, you may be 60% finance or 65% finance, 50% finance, 70% finance. The lender is not going to let you over leverage. Me as an active person is not going to let me over leverage an investment. And because of it, you get the benefits of having the security with good debt. Number six, it protects you against inflation. Your investment is protected against inflation because it continues to go up with inflation, not go down. Next, it's a proven and it's tested over time, like thousands of years. The other thing is that it's easy to finance. It's easy to go off and get financing or anything like that for multifamily real estate. There's a lot of resources for that. So as an investment vehicle, and you're going to invest passively, it's good to know that your investment vehicle banks want it, so you can want it too, right? It's a great investment. Number eight, no, I'm sorry, not number eight. Number nine, it is easy to scale. So, like we said, you have one single family house with one resident, one tenant, or you can buy one address that has 500, or not buy, but you can invest in one address that has 500 tenants in there. And what would you rather? You wouldn't invest in a business that only has one customer. You would rather a business that has a free flowing 500 customers coming in every month that are qualified, ready to pay, and they want to be there. The other one, number 10, is it's hard to disrupt. You can't just press a button and get rid of it. You want to do that. That's a moat around all of your capital and your investments, and it provides all these other things. Number 11, it is a liquid. That means you can't just go and press a button and get your money out, but that is a benefit to you. Being liquid is a problem. When you're liquid, you are a target for lawsuits, problems, emergencies, banks going after you, all that stuff. And then last but not least, number 12 is real. Is a real thing. You know what it is. You can drive by it. You can pull up a record of it. You can show your family and your friends. If it gets left to your family as an investment opportunity, if you're passive, that cash flow continues to go to your family and they know what it is. They're like, hey, we're a partner in that deal. That's huge. So these are some of the things that we look for when I'm looking at a deal. This is kind of my 12-point checklist to say, okay, this is what I'm looking for. These are our rules. If you're going to be creating private wealth for you and your family, all of your investments should check all the boxes of these 12. And if you want a copy of this, you want to hear what we're doing over at Private Wealth, and you want to get more information or attend one of our workshops or join one of the classes that I put on for people interested in creating second streams of income or passive income from real estate, go ahead, leave me a comment. I'll get you over the information and I'll let you know the dates that we have. So I hope this helps you. These are the 12, count them, 12 things that we look for as we're making a decision about what we should invest our money in to create private wealth and passive income for our families to create generational wealth forever. And you should too. All right. You have a good one. Let me know if you need anything. Let's get after it today. Boom.